Hello everybody. Another week has passed and a lot to talk about. We'll start with what is going on in the trade wars front. So there's been an escalation in international trade tensions. We all know that the US and China have been at it for quite a while now. But Mexico has been thrown into the equation as well. So President Trump has threatened Mexico with trade tariffs starting from the 10th of June should Mexico not be seen to be doing the necessary to help the US with the migration crisis on the southern border. So this is good news for President Trump, of course, because he will be able to capitalize politically with his support base. There's elections coming up. But it's not good news for international trade and for the growth of the global economy. Because of this, we've had the Fed voicing somehow contradictory messages. So we've had the president of the St. Louis Fed saying that downside risks generated by escalation in trade tensions may justify a cut in rates, so the next Fed move may be a cut in rates. We've also had the chairman of the Fed, Mr. Jerome Powell, talking along the same lines and saying that it wouldn't totally be out of the picture to see the next Fed move being a cut rate. But then again, yesterday we've had the president of the Dallas Fed saying that he thinks that the current rate is actually neutral and everything is okay as it is. So we shall see. Elsewhere, we've had the Indian Central Bank cutting rates, so following the cue from Australia last week and cutting rates, which of course hasn't been good news for the Indian rupee. So a bit of a storm brewing for emerging economies. So we've had the Indian rupee suffering big losses, but of course the Mexican peso as well is suffering, and is suffering from a double whammy. From one side, we have the trade dispute with the US, that is just a reason, early this week, but also they've had a downgrade on their credit rating from credit rating agencies. So the Mexican peso taking a big battering there and dropping. So emerging economies not doing so well, not such a good time. Elsewhere, we have the UK and the Brexit saga, which continues following the European elections a couple of weeks ago. We've seen that the possibility of having a no-deal Brexit is once again quite real, and therefore the pound is suffering greatly. The other main points that I would like to touch on as well go back to the beginning of the conversation, and it's the result of this escalation in trade talks, in trade tensions. So we've seen that because the Fed became more dovish as a response to this escalation, the dollar has suffered losses, but the equity markets have recorded a rally. So good gains on the equity markets on the back of this, losses for the dollar. Finally, we'll talk about the euro. The euro is waiting and see what's going to happen today. So we have the European Central Bank meeting today. Not really expecting anything substantial, but there's been some rumors that the ECB may be looking into some sort of quantitative easing again. So this could probably be Mario Draghi's last move before he leaves office in September. Should that be the case, should something transpire after the meeting today that points in that direction, then we should all brace for big euro downside risk. This is all for this week. I'll see you again soon.